Ladies and gentlemen, good day and welcome to the Ganesha Ecosphere Limited Q2 and 1H FY26 post-results conference call. As a reminder, all the participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Manish Mahawar. Thank you and over to you.
Thank you, operator. Good afternoon, everyone. I am pleased to host today's earnings call of Ganesha Ecosphere. We have leadership team represented by Mr. Gopal Agrawal, CFO. I hope I'm audible, operator.
Yes, sir, you're audible.
Yeah, so we have a leadership team represented by Mr. Gopal Agrawal, CFO, Mr. Prashant Khandelwal, Senior Vice President, and Mr. Yash Sharma, Director, Ganesha Ecosphere. Without further ado, I would like to hand over the call to Mr. Gopal Agrawal for opening comment, post which we'll open the floor for Q&A. Thank you and over to Gopalji.
Yeah, thank you, Manish, and thank you to the audience. Mr. Yes will deliver the opening remark. Yeah.
Hello, am I audible?
Yeah.
Yeah, hello everyone. Good morning everyone. Good afternoon everyone. And thank you for the introduction, Manish. So a warm welcome to all the participants to our Q2 FY26 earnings call. The second quarter of FY26 continued to be a challenging period for us. Despite our best efforts and strong sales performance, the quarter concluded overall on a adverse note with EBITDA margins compressed to 6.1% and net profits turning slightly negative. The first quarter of FY26 was characterized by a very high volatility in raw material prices with very sharp fluctuations happening over a brief span. The prices surged from 43 to 45 per kg to around 45-56 before retreating very sharply back to 43-44 levels between March and June 2025. Due to this elevated procurement cost during this March to May period, our average carrying cost of raw materials stood at approximately 50 per kg by the end of the June quarter, while the prevailing market prices had declined to 44-45 per kg. Given our typical inventory levels, which we maintain of around 19,000-20,000 metric tons, this cost mismatch led to a significantly higher consumption cost, which resulted in compressed gross margins during the quarter. The elevated inventory costs adversely impacted the gross margins across both our legacy as well as subsidiary businesses, since the raw material is the same for both the businesses, which is post-consumer fed base. Additionally, the MOEF issued a draft notification on 3rd of June in 2025, which proposed a relaxation for the usage of recycled materials. According to the draft, any shortfall in meeting the requirements of mandatory recycled plastic usage during the year could be offset over the following 3 years. This draft notification is yet to be finalized after incorporating all the stakeholder opinions, but basis this draft notification, the F&B industry players, barring a few, either reduced or postponed their purchases of recycled material. This impacted our deliveries of RPET granules, and we could deliver only 70% of our production made during the quarter. The resulting under-deliveries led to elevated inventory levels and a notable decline in profitability. The average selling prices have also dropped by about 4% across the business, contributing further to lower margins. These factors significantly affected our performance during the first half of FY26. However, some long-term directions are also emerging alongside. Our legacy business, which had seen a very dismal performance over the last couple of quarters, is now almost back on track with strong order flows and rising demand for both RPSF as well as yarn segments. Notably, despite initial concerns about the impact of US tariff on the textile industry, the PSF market has remained resilient, supported by firm prices, robust delta and steady demand. Additionally, the rationalization of the GST trade structures across the textile value chain has contributed to revival in the industry demand. Backed by firm sale prices and healthy order inflows, we anticipate improvement in EBITDA margins to the 7 to 9% range during the December and March quarters in our legacy business. In the B2B segment, sales and deliveries are expected to remain below expectations in the December quarter as well, pending release of the final MOEF notification. Additionally, bottling plants are also operating at reduced capacities right now due to the typical seasonal slowdown in beverage demand during the last quarter of the calendar year. This combination is likely to result in further moderation of the uptake. However, based on our recent industry interactions and government interactions, we anticipate a recovery in demand and deliveries beginning January 26, as the uncertainty surrounding the draft notification is confined to the current year only. Furthermore, the regulatory mandate to increase the recycled content for the next year, combined with the FY26 shortfall, will significantly add to compliance requirements. As a result, it has become untenable for the industry to continue deferring mandatory consumption. In response, we have also begun receiving customer commitments for recycle aid deliveries starting January 2026, enabling us to optimize the utilization from the last quarter onwards. Our brownfield expansion at Warangal is on track to be operational by end March 2026, adding an additional 22,500 metric tons of RPET capacity. Though there may be some delays in the greenfield expansions, while the financial performance in the first half of FY26 fell short of our expectations and the inherent potential of our business, the core fundamentals still remain strong. We believe that the worst is behind us, supported by the revival of our legacy operations and the long-awaited emergence of demand in the B2B segment, which is now slowly materializing as anticipated, although with a delay of nearly 9 months. With improved demand, regulatory support, and operational discipline, we believe that we are well positioned to deliver a stronger performance going ahead, specifically from the March quarter onwards. Once again, thank you everyone for joining us today. And now we are ready to dive into your thoughts. We may now open the line for any questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Prakash Kapadia from Kapadia Finance Services. Please go ahead.
Yeah, thanks for the opportunity. We've seen a sequential decline in sales and profitability, the standalone as well as, the subsidiary businesses. Till, Q1, we were fairly confident of surpassing FY25 financials. So, this has, come as a shock. So what has changed so suddenly? And, what are we doing to bring predictability to our business? Shouldn't, we had communicated this to investors in a better manner, saying, this is the kind of volatility we are seeing, or, this is the government notification. So how do we, plan or look at the business as, investors or, potential investors? How do we, get a sense of now what is going to happen from here on?
Yeah, thank you, Prakash. Prakashji, the main reason for the dismal performance of the Q2 was because of the inventory losses and as well as the deferring of the notifications, because of which we could not deliver the quantities which we are anticipating in the market, especially the B2B segment. So the margins was affected. But given the developments in the market and especially the regulation is intact and this notification impact is limited only to this current year only. It is not going beyond this current year. And from next year onwards, the mandatory use will increase from 40% from 30%. So the good demand is visible, and we are also getting the commitment from the buyers from January onward deliveries. So we are looking that the scenario is now is more clear from January onwards.
Right. I get, from this base, you alluded worst could be over and, things could improve. I understand that. But, from Q1 to Q2, at least, we should have given some sense of, this kind of volatility or, government changes or, the global scenario that will, just help, the cost to investors because, bad news and such a bad scenario where, we are from a profit of a high base and, we are a loss-making company today doesn't, showcase good governance and, predictability to our business. So that's my, only mismatch because till Q1, we were very confident of, surpassing FY25 financials. So in that context, this kind of an scenario would, not go well with investors. So maybe as we move towards the quarter and as the government MOEF notification comes, maybe, now communicating that or, telling investors about what could go and what direction could be heading on the positive side would be appreciated. That is, all I have to say.
So Prakash, please go ahead.
Yeah, no, absolutely, sir. You are absolutely right on your part. So, like, what happened this time was like it was a double whammy effect that really happened on the overall financials of us. So, the regulatory part was like overall very much a shock for us also because it was expected based on the discussions that the regulatory notification would get sorted because the notification had come out in June and they had given a period of 60 days to issue the final notification. The 60 days period ended in August, first week itself. And so it was expected that like in August anyways, the regulation should have been, done finally, but it was just getting delayed. So even we did not expect that this kind of huge delay of about 4 to 5 months would happen from the government side, and which led to even like a lot of I would say, a shock for us also on the B2B side. On the inventory side, yes, obviously we have learned our lessons from what happened this year. Obviously we have now put in place systems to be more vigilant of what is happening in the global markets, which led to this a very, very sharp decline, which even we could not predict, at that time as to this would happen, and which led to a decrease in the finished goods prices also. But the overall inventory levels which we were maintaining, which we have across all our operations, all of them suffered a huge, price loss because of that. And you can imagine that the drop from 55 to 43 is a huge percentage drop in the overall inventory costing, which came as a basically a double whammy for us, on the overall financial.
I totally appreciate and understand, running the business and dealing with such volatility is not easy. Now I'm just trying to understand how do we bring back predictability and sustainability to our growth. That is all what I'm trying to understand. If this is maybe a long run discussion, we can take it offline.
Absolutely, sir.
Fine. I will connect offline on this with you. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Deepak Ajmer and IGE India. Please go ahead.
Yeah, inventory, the price reduction is in a way it is good for long term. What's your view there, and how now the price trend is there for the raw material?
Yeah, absolutely. The price which has rose to 55 was not good for the industry at all. So now the level is very, very good for the industry, where we are getting the good delta also in sale and raw material prices.
Yeah, on the capacity addition side, how the overall industry capacity is coming up, and means how confident we are, means when we are starting the commercial production, it is like next year we are targeting, or 1st January onwards we will start the commercial production?
Yeah. So first question regarding the industry capacity. So as of now, about 200,000 ton capacity is operational and approved as of now, and some capacity has been announced, but it takes time to different. Next year it will be operational. As regard our capacity expansion, so we are already plant is under implementation, and it will be commercially operationalized by March 26.
Okay, thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Deepak Sahu, an individual investor. Please go ahead.
Now, my questions are all answered. Thank you.
Thank you. The next question comes from the line of Mehul from 40 cents. Please go ahead.
Hello, sir. Thank you so much for the opportunity. I had a question about the MOEF. Whenever the notification is issued by the government, would there be an update on the update to the stock exchanges?
Yeah. So it is basically no. It is a draft notification. It has not been finalized yet. So the information is sent to the stock exchange, and there is a notification which is issued finally. It is only a draft notification.
Yeah, sir. My question is that once it's finalized by the government, would you be updating the exchanges?
Of course, we would be updating the exchanges and the investors.
And any tentative timeline which you think that it may get finalized? I mean, if it all is aware.
Let me explain it like in a different manner. You see, the original mandate for using any recycled plastic issued in 2022, followed by a final notification in 2024, where government or MOEF has mandated that use of recycled content will be compulsory from the year 25-26, with 30% in first year, 40% in second year, 50% in third year, and 60% in fourth year. And onwards, it will be 60%. Okay. Later on, I think the user industry, the packaging industry, the brand owners, they have gone to the MOEFCC and presented their side that this much of quantity would not be available in first year itself. So it should be implemented in a slightly slow manner.
Delayed manner.
A hard hit on the regulatory mandate may lead to disruption in brand owners or packaging or FMCG like this. This presentation has gone there. So looking to there to avoid the hardship on the packaging side. So the overall concept is still same. You have to use recycled content in the packaging, but just to remove the hardship on the brand owners, MOEFCC has came with a draft notification that okay, if due to non-availability of the material, any shortfall is coming in the first year itself, there will be a carryover only. There is not leeway. It is a carryover for next 3 years for the shortfall quantity. So let's say you are completing 30, instead of 30%, brand owner is completing 20% mandate only. The rest 10% he can carry over for next 3 years. But keeping in mind that there will be a compulsory mandate for next year also 40% and 50% and 60%. So what happened in the industry itself that after this notification, the draft notification came for the public comment for 60 days. So this has been issued in June, and by August, the final comments from the public side has been submitted to the MOEFCC. And as an part of the stakeholder, as an industry affected by the notification, we with our association have also presented this, that after this draft notification came to the picture, the brand owners go slow looking that there will be a carryover, so we have asked them to clear the mandate percentage which can be carryover, and we had several meetings with MOEFCC government officers as well, along with brand owners. Not only the recyclers, but the brand owners has also participated in those stakeholder meetings where we have clearly asked MOEFCC, and they are in the final set of data collection from the industry that what should be the mandate percentage. So what will be there will be a minimum cap on the carryover this year. So we were expecting this to come in October itself, but still, I don't know. There are some procedural delays in the MOEFCC. So we are very hopeful that in next 1 month, from today, in next very 1 month, it has to come. Even not only MOEFCC, there is MOEFCC, FSI, BIS, and even PMO is also in line. And I hope in next 1 month, the mandate will be clearly come on the picture.
Thank you so much, sir. Appreciate your detailed answer. One follow-up question, sir. So, all our industry peers are also affected in terms of what the issues which we have faced, the same challenge they are facing?
Yes, everybody. So for sure, you see, when brand owners have slowed down their recycled content uses, it has affected not only PET, it has affected all recycled plastic, even polypropylene, HDPE. You can see the price of the polypropylene and HDPE is lowest in years. Matlab, the level of price for the recycle scrap polyolefin is at present it is lowest since last year.
Okay. And sir, can I assume that this notification and the challenges which you explained just now, and in the follow-up in the earlier question as well, this affects 100% of our revenues, or it is affecting some part of revenues?
Affecting some part. So you see the bottle-to-bottle segment where the mandatory requirement is primary for the demand of the material. The textiles is not affected. So textile is working very well, which is the initial business of the company. So the bottle-to-bottle food grade granules installed in Warangal is only affected with this mandate.
Okay. So sir, how much is the contribution from textiles, revenue contribution?
Presently about 65% contribution is from our legacy business.
Textiles is legacy business is 60%.
65%, yes.
65%. Okay. And 35% is the PET business.
Yes.
Okay, sir. Thank you so much. Appreciate your patience and detailed answer. Thank you.
Thank you. Ladies and gentlemen, a reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Dhirendra Kumar from Spark PMS. Please go ahead.
Hi, this is Dhirendra. So, am I audible?
Yeah.
So my question would be on the inventory side. So we consumed high cost inventory in Q2, which led to the margin hit. So have we consumed all the high cost inventory in 2Q, or some would be spilling over to 3Q as well?
No, we have consumed the entire inventory which was high cost. Now as on the 30th September, our the value of our inventory as well as the market price is almost at par.
Okay, got it. And my second question would be regarding the MOEF notification. When the industry affects capacity shortfall led to government deferring the consumption limits in FY26, what are the chances that you see that FY27 or 40% limit also could get deferred, because again that much of capacity is not getting added in FY27. So there can be a deferment in FY27 as well, right?
This is solely depending on the progress of the first year itself. So even in last meeting, MOEF has clearly mentioned that if, let's say, let's presume a position, because we were asking what is the clarity on using the rPET content or recycled plastic content. One of the officers has clearly mentioned that if let's presume a position where we don't issue any new notification, then in that case, the existing 30% mandate is prevailing for the current year itself. So don't wait for any notification. They have clearly given their perception that you have to use 30% till we issue any new notification. So the earlier notification will prevail if any modification of the notification does not come. And for the next year onwards, 40% mandate, you see a lot of capacity. Even Ganesha has also increased the capacity. And I don't think that there will be much shortfall. There might be a shortfall of 5-7% in second year. But ultimately, you have to start. This is very clear. And this drive is a long way. So it is not one day drive that everything came in the picture. It has been established in 2016, followed with 2018, 2022, and 2024 mandates. So I think it has to be implemented. There might be a 5-6% shortfall in second year, and that can be very well taken care by the departments. How they are dealing, whether they will charge the penalty from the brand owners who are not fulfilling 40%, or they will give some leeway for that shortfall quantity, that will be decided in due course.
Okay. Got it. Thank you.
Thank you. Before we take the next question, a reminder to all the participants to limit your questions to 2 questions per participant. The next question comes from the line of Naeem Patel from Bastion Research. Please go ahead.
Hi, am I audible?
Yeah, you are audible.
Yeah, thank you for this opportunity. So I wanted to understand this business from a supply side. So as you know that the security of supply is a very huge challenge in this industry. This is why we are able to stay in this business, and it is very difficult for a new player to come in to have a vast network of suppliers. However, as we this year, there will be deferment of orders as the demand will keep on increasing year over year. Will the supplier have more pricing power? Maybe if they were selling at 5% margin this year, just for an example, they would start charging 7 to 10 because it's them who actually have the ability to give us the unorganized plastic to us in an organized way, the distributors and all. So do you expect them to have more pricing power over the years, or is it going to stay the same, or how is it going to pan out according to you? More clarity on that would be helpful.
The supplies of PET bottle scrap is totally depending upon the demand and supply. So certainly when the demand is high, the prices are going up, and when the demand is moderate, the prices are coming down, or prices are stable. So it is entirely dependent upon the demand and supply. And as of now, the enough quantity is available in the market for recyclers.
Understood. And
also to add that these scrap suppliers, basically you see that they are not like very, very large organized companies. They are like the maximum biggest supplier today, if you look at in India, would be probably if you talk about our procurement, the largest supplier would be probably giving us about 1.5% of our total volume. So also that since the suppliers are so many in number, and they only collect the regional local waste and bail that and send, it's not that they have a very high volume impact which they can themselves just create. Obviously supply demand plays a larger role over here.
Understood. And we don't see any more. Do we expect any more volatility in the supply side? Because as you have said in Q1 that the exports of wash flakes has stopped due to some changes in European norms, and which is why there's a sharp fall as well. So do we expect the prices to be at normal as for the coming quarters then? Or how do you see it pan out from here?
Yes. So basically, you are right. After the change in the notification, the exports of flakes from India has dropped drastically. We think that because of that only the huge shortfall had come down, because the volume was like really, really huge. It was almost 10 to 15x the volume that had grown of exports in the couple of months from February to April, which had caused that. So we think now that after the new regulations which are in place, in the last 6 months, there has been no uptick, not any major uptick in the export volume of flakes. And we think that is gonna, unless there is a regulatory change, it's gonna remain the same, because ultimately recycling has to be a domestic phenomena. You have to recycle your local waste and use it basically in the local economy itself to establish circular economy application. We think that it should be like that going forward as well.
Yes. Just one final bookkeeping question. What has been our percentage of revenue from export this quarter and for H1 as well?
For this quarter, we made around 11% of our exports.
Understood. Thank you. That's all from my side.
Thank you. The next question comes from the line of Miraj from CJ Shah FO. Please go ahead.
Thank you for the opportunity. Regarding the draft notification that is currently being floated, it says that the FY26 shortfall can be covered up over the next 3 years. Is the same applicable for FY27 as well?
No. So this is only given for the first year itself, because the presentation given to the MOEFCC was only for the first year. That there will be, due to lower capacity of the recycled plastics available in the market, there will be some hardship or difficulties in achieving first year target. So none of the user has asked any leeway for the second year, and as per current situation, MOEFCC has not done anything for the second or third year. It is only for the first year.
Yeah, basically, when this regulation was implemented from April 2025, the only approved capacity was about 70,000 ton in the country, and the demand was expected to be more, to the north of 200,000 ton, and that's why the user industry presented the case that we would be non-compliant from the day one, and that's why they proposed postpone the shortfall to over next 3 years. It was the rationale behind the notification.
Understood. So the main problem was non-availability of supply. So can you tell us, sir, how has the supply side changed in the last 6 months? What is the current capacity available in the industry, and what was it 6 months ago?
So 6 months ago it was 70,000 tons, and right now it is about 210,000 tons available. FSI approved capacity.
FSI approved capacity, yes.
So Ganesha, our capacity has also came thrice. So at the start of the financial year, we were having only 14,000 ton of rPET available, but at present we are having 43,500. Am I correct, Gopalji? This is the figure.
It is 42,000 tons.
42,000 tons of approved rPET, food grade rPET is available from Ganesha.
Understood. And so the new capacity that we are putting in, by when?
May I request you to join the question queue again?
Sure.
Thank you. The next question comes from the line of Shubham Thorat from Perpetual Capital Advisors. Please go ahead.
Thank you for the opportunity. Am I audible?
Yeah, you are audible.
Fine. So I'm a little new to the company, so I just like to know a few things about the capex.
Sorry, your voice is very, very low.
Is it better now?
Yeah, it is better.
Yeah. So I just wanted to know a few things about our capex program. So you mentioned we are going with some brownfield expansion at Warangal and one greenfield expansion as well. So could you please share what kind of CapEx are we incurring there? What kind of revenues are we expecting, and by when?
So for this brownfield expansion is about 22,500 ton per annum. And we spent about 130 crore for this expansion.
And this will be live by?
And this will be live by end of March. In fact, it would have been operational by Jan end, but because some part of the machine got damaged during transit, and so it is now being replaced, and so it's taking another 1.5 month, 45 days time to come from the supplier, and that's why the operational part shifted from Jan to March.
Okay. And so, for which product are we putting this line, and what kind of revenue are we expecting at the full utilization?
Sorry, can you please come again?
So, for which product are we putting this for line? I mean, is it for legacy business or for the rPET granules business? And what kind of revenues are we expecting from this expansion?
So this revenue will be this plant will be fully operational from and the metal will be available for sale from April onwards. April and the revenue potential of this line is about 225-250 crore annually.
225 to 250.
Yes.
Okay. And so, could you please suggest give me some thoughts about greenfield expansion as well?
Yeah. So greenfield expansion is planned. Though because of this scenario of the market regarding this uses of the delay in uses of the rPET, so the project is slightly delayed, and it is expected to be operational by end of this next financial year.
And what is expected capex over there?
So expected capex is about 500 crore for that project.
Oh. Okay, that's it, sir. Thank you so much.
Thank you. The next question comes from the line of Shubham Agrawal from Roman Capital. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. So my first question is that can you please quantify the absolute amount of inventory loss that you incurred this quarter for both of your businesses?
So it is roughly to the tune of 10 to 11 crore.
Okay. And got it. And sir, coming to your legacy business, so since your realizations have now dropped below the 90,000 kind of mark, and your RM seems to be inflated yet. That given the current RM and what you are seeing currently, what kind of margins can we expect to make in the legacy business?
Yeah. So going forward, we are looking. This is the demand and this is the market scenario. We are looking for the EBITDA margins of in the range of 7 to 9%, which we were earning earlier before this business had some headwinds in last 2-3 quarters. Before that, we were earning 7 to 9%. And we are expecting it to come back on track from this December quarter.
Understood. Sir, but in this legacy business, like about a year back or so, we used to make like 10-11% margin, right? Are we expected to get back to that level?
Presently, we are looking for 7 to 9%, and we are trying to get it improved further. Maybe it may be over next quarter, in March quarter, we may be more than 10%. But in the current quarter, we are expecting 7 to 9%.
Understood. Understood. So lastly, on your rPET B2B business, sir, can you just help me with the number of the capacity utilization number for the rPET granules line in the Q2, and what kind of capacity utilization are you looking forward to in Q3 and Q4?
So the Q3, as we discussed earlier, the Q3 is not Q3 deliveries are not clear very much as of now because of this notification issue. But from March onwards, we are expecting we would be reach to 90% plus capacity utilization in our rPET business.
So Q3 most likely would be in line to what we are witnessing Q2, right? Or even lower?
Correct.
Understood. Got it, sir. Thank you so much, and looking forward to the future.
Thank you.
Thank you. The next question comes from the line of Bhavya Gandhi from Dalal and Broacha Stock Broking Private Limited. Please go ahead.
Yeah, hi. Thanks for the opportunity. Gopalji, just wanted to understand, is there any way to hedge our raw material, maybe through derivatives or exchange? Because I believe scrap bottle cannot be hedged. If at all there is some related commodity which is very similar and we can hedge our raw material pricing.
So basically, it is not, Bhavya, it is not a very organized collection system or organized suppliers are there. So there is no hedging mechanism available. Like it is available, I think it is in metal scrap, or I think there is some hedging mechanism, but it's not there in plastic scrap.
Okay, got it. And sir, for the 22,500 ton capacity addition, have we made the payment for the machinery and all? Because I see 115 crores sitting in the capital work in progress. So is it regarding that only, or is it something else?
Yeah. So mostly it is for this 22,500 expansion, and most of the payments have been made.
Most of the payments. And sir, just last thing on the traditional business, what should be the long-term gross margin one should work with? If you can provide some range.
So it is normally in the range of 62 to 65, 66%.
Okay. Gross margin. Okay. 100 minus, I'll do it. Okay, no issues. Got it, sir. Yeah, that's it from my end. Thank you so much, sir.
Thank you. The next question comes from the line of Disha from Sapphire Capital. Please go ahead.
Hello. Am I audible?
Yes, please. Yes, Disha. You please go ahead. Yeah.
Yeah. So sir, this quarter was like an exceptionally weak quarter because of the delay notification and the inventory cost. So how do you see like FY26 on an overall basis in terms of revenue? What do you end the year with, sir?
So in number terms, we cannot predict because the quarter three, especially on bottom to bottom segment, we are not clear how much revenue will generate.
Right. So quarter three, we're expecting a similar performance like Q2?
Yeah. We are not much hopeful from the quarter three.
And then some pickup in Q4.
Certainly we are not expecting it. It will be as per the quarter two, but it may be around quarter one results.
Okay, and then some improvement in quarter four.
Quarter four, we are hopeful that quarter four will revive the business.
Right. Okay. And so on the margins front, on a consolidated basis for FY26?
Sorry?
And for the margins?
Yeah. So the basically margins, and we are not giving any margin and top line guidance this time. Better we would be better in providing the same after the Q3 numbers.
Okay, but all the inventory loss that we have suffered is incorporated in the Q2 numbers, right? So going forward, at least that loss will not be reflected in the numbers.
Yes, the inventory loss will not be there. That is sure. And that's why we are saying the Q3 will not be the replica of the Q2, but maybe Q1.
All right. Okay. Thank you. That's it from my side.
Thank you. The next question comes from the line of Atharva, an individual investor. Please go ahead.
Hi, am I audible, sir?
Yeah, you are audible.
Yeah, thanks for the opportunity. I just wanted to know what is the total capacity utilization of Q2?
So, on Concall basis, the average capacity utilization was about 80%.
Okay. And is the 1,500 crore guidance for FY26 still intact, given in Q1 performance?
So I just answered this question in the last question from Disha. So it is not very much clear the top line numbers for the Q3 to us. Basically, it depends on the deliveries for this of B2B for this month. Though we are very much positive for our legacy business, but for this B2B business, we are not sure.
So the guidance will be updated after Q3.
Yeah. Guidance will be, yes, after Q3.
Okay. And what is your client concentration?
So in our legacy business, the client base is very scattered, and we are not fetching more than 5% from a single customer. But in case of B2B, yes, of course, client concentration is more, and because we are presently supplying to the big bottlers, Coke and Pepsi only.
Okay. That's it from my side. Thank you very much.
Thank you. The next question comes from the line of Pankaj Agrawal, an individual investor. Please go ahead.
Hi, good morning. My question is with respect to the product mix of rPET chips, which is relatively perhaps higher margin product, and the rPSF, which is comparatively lower margin. So what is our current status of this product mix? And going forward, let's say by 2027 end, when these current scenarios get stabilized, what do we expect 2027 end our product mix of rPET granules and chips versus traditional rPSF?
So currently our product mix is about 65% is from the PSF side, 20% from the chip side, and rest is from the yarn side. But going forward after this greenfield expansion and brownfield expansions, this product mix will change to 65% from the chips and 35% from rest of the businesses.
So is the current scenario going to affect this product mix for 2027, or will it get shifted towards 2028 or 29?
Yeah, it will be shifted after this expansion of 22,500. This ratio chips ratio will be higher than 20% in next year.
So 2027 end we are expecting the improved contribution from higher margin chips.
Correct.
Okay. And my second question is with respect to some of the previous discussions on the premium fibers being developed. For example, we were talking about flame retardant fibers or antibacterial fibers or for that matter, biodegradable fibers. So any development in this regard where we could have improved profitability because of premium products in coming quarters?
Yes. That premium fibers are getting ground. Though the pace is very slow because it's very premium product, so the demand and the supplies are very slow, but it is getting traction and quarter to quarter, and we are expecting good margins from there.
So when do we expect launch of these kind of fibers in coming quarters?
So you see these are the premium products, and it cannot get a very great proportion of the overall product mix. So yeah.
And who could be target customers for these kind of fibers, even if it's smaller volume?
So you see, looking to the specialty of these fibers are mostly used for industrial purposes, not for the common man purposes. So, of course, it is high-end industrial ends where these fibers are being used, like flame retardant and all those. Flame retardant is basically used in automotive and some industrial applications. So these are very specific products and take a longer time to get into the line, and of course the product will not be for the mass. It will only for the specific purpose.
Okay. And my last question with respect to what everybody is talking for this government notification.
What I understand from this that even if the draft notification is finalized in its current form, for example, even in the worst case scenario, in that case, will the impact only be for the first year, and second year we may get higher demand because all these requirements will get shifted from year 1 to year 2?
Yeah.
Of
So
course, if any carryover is given, then it has to be added to the next 3 years. So it is nowhere the final mandate percentage has been reduced. It is just a carryover. So like you are not paying tax this year, but you have to pay the tax next year.
So this means if the pressure is there, that is for the first year, even on an overall industry basis, the second year and third year seems to bounce back of demand from the customers.
Of course.
Correct.
Of course.
Sure. Thanks. Thanks for clarifying.
Thank you. We take that as the last question for today's conference. I now hand the conference over to management for closing comments.
Yeah. Thank you for all joining today and for your continued trust and support. We are confident in our strategic direction and committed to delivering long-term value. Your insights and engagements are invaluable as we navigate the path ahead. We look forward to updating you on our progress in the next quarter. Until then, stay safe and stay connected. Thank you. Thank you very much.
Thank you.
This brings the conference call to an end. On behalf of Antique Stock Broking Limited, we thank you all for joining us. You may now disconnect your lines. Thank you.